management. Jonathan, I'm actually talking to you for the first time in this new avatar.
Good morning. Hi.
Hi, how things?
Good, thank you.
India may have lost the first test match, but I'm hoping we'll come back soon.
Yes, I'm going to be at Lord's in a couple of weeks. So
It's the weather which got heavy. It's the weather which got heavy on the last day, Jonathan.
Sorry, I missed that bit.
No, I say it's the weather which turned out to be the tricky part on the last day.
Yes, yeah. Well, we'll see. Good, great test match though.
It's turning out to be a great patch for global equities. I mean, just not Indian equities. S&P 1% away from its all-time high, Nasdaq at an all-time high. The same market in the month of April, when I say same market, equities in the month of April were nervous because of tariff implementation. Has that tariff adjustment, is that adjustment over now?
I think you're quite right. If you look at where equities are globally and you look at the worries that markets have ingested, it's quite extraordinary, really, to see where we are. I think what's happened, there's certainly a case of exhaustion with regards to the constant news flow coming out of Washington, the tariffs, what's going on geopolitically in the Middle East, and investors are just, for the moment, ignoring it. And obviously, as the index is pushing higher, it's sucking in more and more of the bears who are being forced to reallocate back into equities. So it is difficult, but there are clearly, a lot of concerns that still remain out there. And then obviously on top of all that, we've got seasonality. Usually, this is the latter half of June, and the next couple of months seasonally are usually pretty much the worst part of the year for markets.
The flows which have come back into India, are they a function of just the weakness in the dollar index, and do you think it will continue?
Yeah, I mean, if you look at ETF flows, obviously they've been very positive coming into India globally, and into emerging markets as a whole. I think certainly the move we're seeing from global and US investors to broaden out their global portfolios to not just be US plus a little bit of other stuff, and certainly we're seeing that happening. And there's quite a bit of money coming out and searching for homes, and EM has certainly benefited from that, and India remains a big beneficiary of that.
Okay, Jonathan, that's the take. Also want to understand your take on the dollar index that's moving down. Along with that, in tandem, you also have gold prices that are softening. Now, given that all eyes are on the US inflation, the PCE data that's going to be coming today, how do you think all of these metrics are going to come together and shape up?
Yeah, I mean, our view, the dollar has moved a long way down in a very short period of time, and probably is overdue a bit of a rebound, if we're honest. We still, though, on a medium to longer term basis, probably can see the dollar weakening off a little bit, but it has come already a long way down. And looking at sort of gold and some of the energy prices, we're still of the view that inflation, the whole inflation issue isn't dead and buried, and that we do believe that inflation will rear its ugly, but we do think the inflation issue will come back. We think growth will probably ease off, particularly in the US, and therefore the sort of stagflationary environment, which is very negative for equities, there is a possibility of that happening sometime next year.
Let's talk about your India holdings. You had a very large exposure to banks. At some point in time, you were owning Indian hotels, your exposure to Tata Motors, and a lot of IT. Has that changed?
Not really. To be honest, the market has done incredibly well. The rebound's been strong. We've kept with our position. The bank side, we've seen obviously quite a big push up in the private sector. Banks have done very well. We're still very comfortable with that area as a way to broadly gain exposure to the broader Indian story. So we're still holding those. IT remains a little bit difficult. We have seen a rebound, but obviously the Accenture news out, a week or so back or a few days back, shows that there's continuing to be pressures in the sector, despite on a sort of medium-term view, some good growth drivers that we still see. So we've not made any changes to our Indian positions. Still very comfortable with it. And it's probably if the market came off again, we might look to increase exposure a little bit. But at the moment, on a sort of emerging market basis, we're probably looking still to allocate a little bit more to China than India at current valuations.
Okay, so that's the take on what Jonathan is liking as of now and how he's positioning his strategy in the Indian markets. Jonathan, hold that thought. Let's shift focus and talk about a story that we have been talking about since the beginning of the day, and that's the Tata Capital fundraising story that we're talking about. They've received approval for 1,752 crores rights issue, and they've received a nod for their debt issuance worth 30,000 crores via the private placement segment as well. So this is something that has been in focus ever since the get-go. We understand that this nod has come in from SEBI, and they have recently also approved the draft offer document of the Tata Capital IPO. So this is also going to be something that's going to be very keenly watched in the months to come leading up to the end of this year. And what we understand from sources is that there is a $2 billion IPO that's in the works on the back of this Tata Capital being in news today. Let's take it across to my colleague Varun, who's joining by with some more details about this. Varun.
Well, so one more right issue coming from Tata Capital, and this time it's 1,752 crores. This has been approved by the board, and around 30,000 crores in private placement via debt issuance. Now, this is not the first time that the company is raising funds. If you look from FY19 to FY24, the company has raised funds to the tune of 500 to 2,500 crores, and in earlier 2025 also the company has done one more right issue of around 1,500 crores. So this is the second right issue that the company is doing in recent times. If you look, this company is actually 92.8% owned by Tata Sons, and other 7.2% is being held by other Tata Group companies, among which Tata Investment has the highest holding. Other than that, you have Tata Consumer Products, Tata Chemicals, Tata Motors and Tata Power are the other Tata Group companies who are holding stake in this Tata Group company, that is Tata Capital. Now, this is a flagship company of Tata Group, flagship financial service company of Tata Group, well diversified NBFC. It has an AUM of more than 1.76 lakh crores and lending book of more than 2.22 lakh crores. Now, of the overall book, 63% of the book is actually retail portion, and if you look in the last 3 years, the company has shown good growth from an NII of around 3,719 crores in FY23 to an NII of around 8,314 crores in FY25, and the profit has also been shown a steady growth, now stands at around 2,594 crores. This is on a standalone basis, which I am telling you. Also, if you look at the net interest margin of the company, it was in the range of 4.2 to 4.5% during FY21 to 24, and now it has risen to around 5% in the year FY25. So this is an interesting story. Tata Capital once more coming out with a right issue, and this is before the IPO that has been approved by SEBI of around $2 billion.
Jonathan, in general, which are some of the new themes or sectors in India which you like? For example, solar has become a mainstay. There was a time when defense was on back burner now, but is in the main stage. What do you like, which could be new, interesting theme, idea, or perhaps a space?
Yeah, it's a bit difficult if I'm honest. The market obviously does move around. You're very busy. The market is very busy in IPOs. As you rightly say, defense, which seems to be very big over here in Europe at the moment, has, that was a strong theme in India for some time. Difficult to play some of these emerging themes through, stocks which are really focused on it. So at the moment, if we're honest, we're just sticking to the big stuff, not too specialist, not too, nothing too emerging. We try to get stuff which picks up the broader picture. So apologies, I haven't got any emerging new insights of stuff that I can share with you at the moment.
Arpit, anything interesting which to your mind is at a crossroad now where you think one should be booking profits? We always focus on kya lene ka, never talk about kya bechne ka. Arpit?
Yeah. So if you see overall, talking about the market as a whole, so if you see the entire series, Nifty was struggling, but last couple of days you have seen a very classical range breakout. So I think from a sector specific and stock specific, I think a traction will be seen on the heavyweights. And going forward, I think heavyweight is likely, such as from the oil and space, Reliance, from the telecom space, Bharti, from the banking space, ICICI Bank, NBFCs, Bajaj Finance. So I think for next couple of days, if we look at the heavyweights would be in focus because the broader market is already relatively outperformed. And I think July series, as for the seasonality also, it's a positive series for the bulls. So I think heavyweights will be in action. And for next couple of days to weeks time, Reliance, Bharti, ICICI Bank, HDFC, Bajaj Finance would be on radar for next couple of weeks time.
Okay, so those are some of the stocks that are looking good. But Arpit, if you talk about the trade setup immediately on Monday, given that we've started this new series, and today we're very close to 25,650, what are the immediate levels that you're seeing for Monday?
Talking about Nifty, 25,500 would be the major base for Nifty, and on the upside 25,750, and then 25,850 would be the levels that we're looking out for Nifty. For Bank Nifty, see 57,000 would be a major support for Bank Nifty. On the upside 58,000, and then position 58,500 would be levels to watch out for.
Okay, and Kunal, what about you? Immediate trade setup, what do you think we could open? How do you think we could open on Monday, and what could the setup look like?
See, I think we should trade into this band now, 300 points band, 25,500 to 25,800 on the spot levels, at least on the start of the next week on the Nifty. And I think on the Bank Nifty, but I would probably believe that there could be a chance that you might see slight bit of outperformance, especially with the private sector banking names making a comeback for themselves. So I think in that sense, 58,000 to 58,500 is where I would expect the targets for the Bank Nifty, for next week. And the support for the Bank Nifty is closer to 57,000 mark.
Jonathan, as we talk about the first half, it was dominated by news. What could influence the script of the second half? Will it be again dollar? Will it be again Donald Trump? Will it be again flows? What will influence the second half?
Yeah, I think, as I said earlier, investors are somewhat exhausted with the constant news flow from Washington, and therefore perhaps, with the tariff thing, will ease off a little bit. We've gone past sort of maximum tariff issue time, and therefore it's back down to the economy. I think the major sort of short-term risks would be what's going on with the next appointment of the Federal Reserve governor, which obviously is going to be, I think, making the news in the next few days, which could disrupt a little bit, some of the impact of the Fed. And then, but broadly speaking, expectations certainly are for inflation to tick up in the US in the short term as some of the tariff costs start to feed through to the bottom line. So we're expecting inflation to pick up, growth to slow down a little bit in the US. But on the other side, you're seeing a pickup in growth in Europe. That's definitely happening. And obviously, China continues to grind higher as well. So yes, the US might be sort of easing back a little bit, but the rest of the globe is certainly looking a little bit better. So it's a very mixed, non-correlated picture I think we're moving into. And the situation for the likes of India and some of the other emerging markets looks quite positive here from a macro perspective. They're better positioned. I think the situation, in the next few months could be quite positive actually for equities.